Welcome to the Monkey's Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding nice stocks just for you. So all you have to do is just watching this entire video and decided if the presented stocks could be something for your portfolio. It doesn't get much easier than that. In return to all my preliminary research and hard work, I would really appreciate it if you would drop the subscribe button to become part of the Monkey's Stock Club family, so you will never miss a video again. Also drop the like button if you enjoyed the video, so that helps the YouTube algorithm to push my video. Please be aware that everything I say here is just my opinion and no investment recommendation. As you can see, I'm just a monkey and not an investment banker. Nevertheless, I have pretty nice analysis tools to value stocks and I want to share all the exciting stuff with you. And honestly, how do you feel when you are told, just look into Yahoo Finance and build your KPIs to evaluate a company? I think most people are scared off, and most of all it is a hard work to collect all the data. But don't worry, I'm there to do the groundwork and show you only the interesting results, so you can do the cool stuff. Please stick around for the entire video, so you don't miss any great chances to make big money. So, don't waste time, and let's get started with some numbers. So today we're gonna talk about Etsy and eBay, and the end of this video we will awarded one company as the winner. We will do a comparison between both companies. In the first step we will use the high growth investing strategy. It is a long-term oriented strategy for stock picking of growth companies. The high growth investing strategy uses 6 key figures, which are suitable for filtering out the outstanding companies from an investment universe of fast-growing companies, even if they are not yet profitable. In a second step we will use the quantitative analysis strategy. The investment strategy evaluates a share on the basis of 6 criteria that can lead to above-average performance. And last but not least we will do some scenarios for estimating the fair price by Peter Lynch. So we start with the high growth investing strategy. First, an HGI score is calculated for each share according to a simple points system. The HGI score consists of 6 criteria for which 0 to 3 points are awarded. In total, a share can therefore receive a maximum of 18 points. On the IMAX screen you see both companies, with the 6 KPIs running from left to right. And we start right away with the first KPI. Enterprise value divided by sales actual. Enterprise value is a measure of the value of a company regardless of its financing. If you divide the enterprise value by sales, you get an important ratio for estimating the valuation of fast-growing but still loss-making technology companies. 3 points are given for values less than or equal to 8. 2 points for values greater than 8 and less than or equal to 10. And 1 point for values greater than 10 and less than or equal to 12. In the upper right corner you can see a diagram where you can compare the current score of both companies. Etsy has an enterprise value divided by sales of 13.8, and eBay has a value of 3.73, Etsy gets no point, eBay gets 3 points. The next KPI is the gross margin trailing 12 months. It results from the sales minus the direct costs divided by sales. The gross margin provides a good indication of the profitability of a business model. The higher the percentage, the more money a company has available for sales, marketing, research and development and capital. 3 points are awarded for values greater or equal to 75%, 2 points for values less than 75% and greater or equal to 65%, and 1 point for values less than 65% and greater than or equal to 50%. Etsy has a gross margin of 71%, and Slack has reached 77%. Etsy gets 2 points, because the value is between 65 and 75%, eBay gets 3 points, because the value is greater than 75%. At the top of the tracking diagram Etsy has now 2 and eBay 6 points, as the sum of the first 2 KPIs. The next KPI is the Rule of 40 score trailing 12 months. The sum of sales growth and free cash flow margin is calculated. The Rule of 40 is a simple key figure for assessing the efficiency of a company's growth and thus the quality of its business model. The higher the value the better the business model of the company. Values above 40 are considered attractive. 3 points are awarded for values greater than or equal to 50%, 2 points for values less than 50% and greater or equal to 45%, and 1 point for values less than 45% and greater than or equal to 40%. Etsy has a Rule of 40 score of 121%, and eBay has also 17%. Etsy gets 3 points as the value is over 50%. eBay gets 0 points. The next KPI is the sales growth trailing 12 months. 3 points are awarded for values greater than or equal to 40%, 2 points for values less than 40% and greater or equal 30%, and 1 point for values less than 30% and greater than or equal to 20%. Below on the IMAX screen you can see the sales growth of both companies over the last 3 years. Etsy has a sales growth trailing 12 months of 84%. 3 points for this. eBay has a sales growth trailing 12 months of -1.5%. For this eBay gets 0 points. The next KPI is the debt ratio. The debt ratio results from the debt last quarter divided by equity last quarter. A debt ratio less than 1 indicates low debt, while a debt ratio greater than 2 indicates possible risks from debt. There are 3 points for values less than or equal to 0.5, 2 points for values greater than 0.5 and less than or equal to 1, and 1 point for values greater than 1 and less than or equal to 1.5. Etsy has a debt ratio of 1.67, therefore 0 points. eBay has a debt ratio of 2.8, for this Slack gets 0 points. The next KPI is the PEG trailing 12 months. It is calculated by dividing the price per earnings ratio by the profit growth trailing 12 months. The PEG is one of the most important key figures for the assessment of already profitable growth stocks. If this ratio is between 0 and 1, this indicates an undervaluation. The PEG can only be calculated for companies that are already sustainably profitable. There are 3 points for values less than 1 and greater than 0. 2 points for values greater than or equal to 1 and less than 2. And 1 point for values greater than or equal to 2 and less than 4. The PEG of Etsy is 0.42. Therefore 3 points. The PEG of eBay is 0.42 as well. For this Slack gets 0 points. In terms of the high-growth stock analysis, Etsy is the winner with 11 points in total. Let's start with the quantitative analysis strategy. The investment strategy evaluates a share on the basis of 6 criteria that can lead to above-average performance. For each criterion one of the following values is assigned, +1 point, 0 points, or -1 point. The return on equity last year reflects the relationship between profit and equity. Indicates how the equity of a company has earned interest during a financial period. A shareholder can see from the return on equity how profitable his investment in the company is. A+ point is given for values greater than 20%, a minus point for values less than 10%, and 0 points for values between 10 and 20%. On the top right you can see a diagram where you can always compare the current score of both companies. Etsy has a return on equity of 24% and eBay of 62%. Both companies are getting 1 point. Next one is the EBIT margins. It is the ratio of EBIT to sales. High EBIT margins are a quality criterion for the investment risk. The higher the EBIT margin, the easier it is to manage declining sales. A+ point is given for values greater than 12%, a minus point for values less than 6%, and 0 points for values between 6 and 12%. Etsy has an EBIT margin of 11 and eBay of 22%, therefore Etsy is getting 0 and eBay 1 point. Next KPI is the equity ratio. It is the ratio of equity to total capital. The equity ratio provides information about the credit rating of a company. Plus point is given for values greater than 25%, a minus point for values less than 15%, and 0 points for values between 15 and 25%. Etsy has an equity ratio of 26 and eBay of 16%. Both companies get 1 minus point. It continues with the price per earnings ratio of the last 5 years. Indicates after how many years you have doubled your stake, assuming that the profit remains constant. It is therefore a good indicator of whether a share is expensive or cheap. Plus point is given for values between 0 and 12, a minus point for values greater than 16 or less than 0 or not available, and 0 points for values between 12 and 16. Etsy has a PE ratio 5 years of 122 and eBay of 24, both companies get another minus point. It continues with the current price per earnings ratio. The important factor here is the price per earnings estimated by analysts for the current fiscal year. A+ point is given for values between 0 and 12, a minus point for values greater than 16 or less than 0, and 0 points for values between 12 and 16. Etsy has a current PE ratio of 73 and eBay of 15. Etsy gets 1 minus point and eBay 0 points. The next KPI is the profit growth of the current fiscal year compared to the next fiscal year. The estimated earnings per share for the next fiscal year are compared with the estimated earnings per share for the current fiscal year. A+ point is given for values greater than 5%, a minus point for values less than -5%, and 0 points if otherwise. The expected profit growth for Etsy is currently 2%, eBay performed better with an profit growth of 9%. Etsy gets 0 and eBay 1 point. In total Etsy gets 0 and eBay 2 points out of 6 possible points. So within the quantitative analysis eBay makes the race with 2 points out of 6. And last but not least we will calculate the fair value, by the Peter Lynch formula. Above you can see an overview of the two results of the applied analyses. On the iMac screen you see the following calculation. First you see the earnings per share of the last 3 years and on the right side the estimated earnings per share for the current and next year. If we compare EPS 22 with EPS 19 and divide it by 4 we get the average profit growth. The average profit growth for Etsy is 55%. If you multiply that 55% by the EPS next year of $2.17 we get a fair price of $119. Comparing this to the current price of $157, the gap is down -24%. The average profit growth for eBay is 121%. If you multiply that 121% by the EPS next year of $3.68 we get a fair price of $445. Comparing this to the current price of $50, the gap is up +790%. Under the circumstances I would see eBay as the winner, since the price is currently undervalued. Etsy has currently a fair price. Nevertheless Etsy can still be a good starting point to buy. Etsy has positively surprised many investors by the strong results during the corona pandemic. The consequence, a drastic increase in the share price. The share price also managed to climb from its low for the year in March 2020 to an all-time high of $153.20 in October 2020, a fourfold increase. The main driver of this surprisingly good performance can be seen in the sale of self-sewn nose and mouth masks. These provided an additional customer rush and in some cases were able to attract multiple buyers. The fact that this additional business could disappear in the future can already be seen from the forecast for the fourth quarter of 2020. The only growth expected here is between 70 and 90% in sales, which is less than in the 2 previous quarters, but more than was foreseeable in the previous year. Whether a second wave of infection can give the stock another boost remains a question of many variables. It could be possible, but it does not have to be. However, since there is now a large supply of masks available on the market, such a strong increase should not be considered realistic. For the year 2020 as a whole, Etsy should be well above the growth of the previous year. And in the following year 2021, the signs continue to point to growth. Positive impulses can also come from international expansion and the further development of the business model. In principle, the company is benefiting from the megatrend e-commerce. Etsy also knows much better than eBay how to engage its community. In view of the recent consolidation, a possible time to enter the market could be now, provided that investors expect growth to remain high even beyond the corona pandemic. That was it from my side. I hope you enjoyed the video. If so, then drop the like button for the YouTube algorithm. Press the bell to get a notification when I release new content. And please drop the subscribe button and become part of the Monkey Stock Club family. So have a nice day and hopefully we will meet again. Bye bye.